Stay away from Cathie Wood, and here's why. Wood's investment approach embraces high levels of risk in exchange for the potential for outsized rewards. In today's rapidly evolving investment landscape, knowing how to navigate emerging technologies is crucial. Cathie Wood, the founder and CEO of ARK Invest, has become a key voice in this space, championing the potential of technological innovation while also highlighting the associated risks. Cathie Wood's investment approach. Cathie Wood's investment strategy revolves around the belief that technological disruption is a major driver of economic growth and innovation. Unlike traditional approaches that favor stable, established companies with predictable returns, Wood focuses on identifying and investing in emerging technologies that have the potential to transform entire industries. Her areas of interest include artificial intelligence, AI, blockchain technology, electric vehicles, EVs, and biotechnology. Wood's approach is based on the conviction that the greatest financial returns come from investing in companies that are at the forefront of technological advancements. She and her team at ARK Invest seek out firms pioneering these new technologies, betting that their innovations will not only revolutionize their respective fields, but also deliver substantial long-term growth. This forward-looking perspective drives the investment decisions for ARK Invest's various funds, including the ARK Innovation ETF, ARK Genomic Revolution ETF, and ARK Next Generation Internet ETF. ARKK exemplifies Wood's philosophy. It focuses on companies that are expected to benefit from disruptive innovations across multiple sectors. The fund's portfolio includes firms involved in electric vehicles, advanced robotics, and gene editing. This strategic focus aims to capitalize on the rapid development and adoption of these technologies, with the expectation that they will lead to transformative changes in the economy and society. Wood's investment approach embraces high levels of risk in exchange for the potential for outsized rewards. This is a departure from traditional strategies that often prioritize stability and gradual growth. By investing in emerging technologies, ARK Invest aims to capture exponential growth opportunities, even though these sectors can be highly volatile and unpredictable. The philosophy behind ARK Invest's strategy is also reflected in its active management style. Unlike passive strategies that track established indices, ARK's funds are managed dynamically, adjusting holdings based on new technological developments and market trends. This flexibility allows ARK Invest to stay agile and responsive to changes in the technological landscape, but also introduces a higher degree of volatility. For investors, Cathie Wood's approach offers a chance to engage with some of the most exciting and potentially lucrative areas of the market. However, it also requires a tolerance for significant risk and a belief in the transformative power of disruptive technologies. The high growth potential of sectors like AI and biotech can lead to substantial gains, but the volatility and uncertainty associated with these investments mean that there can also be sharp declines. In essence, exploring the full implications of investing in disruptive technologies, as promoted by Cathie Wood, involves understanding both the tremendous opportunities and the risks. Her investment philosophy challenges conventional approaches by focusing on innovation and future potential, providing a unique perspective on how technological advancements can shape the future of investing. For those willing to embrace the inherent risks, Cathie Wood's strategy represents a bold approach to capturing the next wave of economic transformation. Risks of investing in disruptive technologies. Investing in disruptive technologies is alluring, but comes with a unique set of risks that can significantly impact returns. Cathie Wood's strategy through ARK Invest exemplifies this high-risk, high-reward approach. Here's a closer look at the specific risks associated with investing in disruptive technologies. Volatility and market risk. Disruptive technologies often experience extreme volatility. This volatility arises partly from the nascent nature of these technologies and the speculative nature of the companies that pioneer them. For instance, stocks in sectors like electric vehicles, biotechnology, and artificial intelligence can see sharp price swings. These fluctuations may result from unpredictable challenges, such as technology failures, regulatory hurdles, or shifts in market sentiment. ARK Invest's ETFs, including ARKK and ARKG, vividly demonstrate this volatility. During periods of rapid technological advancement and positive news flow, these funds can deliver spectacular returns. However, they can also experience dramatic declines when market conditions sour or when technological breakthroughs face delays or setbacks. This inherent volatility can be particularly risky for investors who are not prepared for substantial fluctuations in their investment values, dependency on future innovations and their success rates. Investing in disruptive technologies involves betting on future innovations. These investments are often based on the potential of new technologies to reshape industries and drive substantial growth. However, the success of these innovations is not guaranteed. Many disruptive technologies face significant hurdles before they can achieve widespread adoption. For example, investments in biotechnology firms focusing on cutting-edge treatments depend heavily on the outcomes of clinical trials and regulatory approvals. If a biotech company's innovative treatment fails to gain FDA approval or faces unforeseen complications, the impact on the stock price can be severe. Similarly, companies involved in emerging technologies like quantum computing or autonomous vehicles may face delays in bringing their products to market or encounter technical challenges that limit their commercial viability. These uncertainties make it difficult for investors to predict which technologies will ultimately succeed, increasing the risk of investing in these sectors. The impact of macroeconomic factors on disruptive investments. Macroeconomic factors can significantly influence the performance of disruptive technologies. Economic conditions, interest rates, inflation, and geopolitical events can all affect the broader market and, by extension, investments in disruptive technologies. For instance, during periods of economic uncertainty or rising interest rates, growth stocks, especially those in high-risk sectors, often face greater scrutiny from investors. Higher interest rates can increase the cost of capital for companies relying on debt to fund their innovation projects, potentially slowing down their development and reducing their profitability. Inflation and economic downturns can also impact consumer spending and business investments, affecting the growth prospects of disruptive technologies. For example, if a major economic slowdown occurs, companies might cut back on investments in new technologies, and consumers might delay purchasing innovative products, impacting the revenue streams of companies within ARK's ETFs. Additionally, geopolitical tensions and trade policies can influence the global technology supply chain, affecting companies that rely on international components and markets. Disruptions in the supply chain or changes in trade policies can impact the cost and availability of key materials, potentially delaying the development and commercialization of new technologies. Case study: ARK Innovation ETF ARKK. The ARK Innovation ETF ARKK is one of the flagship funds managed by ARK Invest, spearheaded by Cathie Wood. This fund is renowned for its focus on disruptive technologies and innovation-driven companies. Understanding ARKK's performance and its major investments provides valuable insight into the risks and rewards associated with Cathie Wood's investment strategy. Performance overview: ARKK was launched in October 2014 with a mission to invest in companies that are expected to benefit from advancements in technology and innovation. The ETF gained significant attention and popularity, particularly during the tech-driven bull market of 2020, when it delivered an extraordinary 153% return. This impressive performance was largely attributed to the rapid growth of technology stocks and the success of companies involved in transformative sectors such as electric vehicles, genomic research, and artificial intelligence. However, ARKK's performance has been highly volatile. After its spectacular gains in 2020, the fund experienced a sharp decline in 2021 and 2022. This decline was driven by a combination of factors, including broader market corrections, rising interest rates, and a shift in investor sentiment away from high-growth stocks. For instance, in 2022, ARKK's value fell by approximately 67%, reflecting the challenges faced by high-growth technology stocks in a changing economic environment. Major investments: ARKK's portfolio is known for its concentration in high-profile, innovative companies. The ETF primarily focuses on sectors such as genomics, autonomous technology, artificial intelligence, and blockchain technology. Some of the major investments in ARKK's portfolio include Tesla Incorporated. Tesla has been a cornerstone of ARKK's investment strategy. Cathie Wood's bullish stance on Tesla, driven by its leadership in electric vehicles and renewable energy, contributed significantly to the ETF's gains in 2020. However, Tesla's stock, while still a major holding, has faced its own set of challenges, including production issues and regulatory scrutiny. Roku Incorporated. Roku is another prominent stock in ARKK's portfolio, reflecting the fund's emphasis on digital media and streaming technology. Roku's growth has been fueled by the increasing adoption of streaming services and its expansion into new markets. Despite its strong position, Roku has faced competitive pressures and market volatility, impacting its stock performance. CRISPR Therapeutics. This biotech company is a key player in ARKK's focus on genomic revolution. CRISPR Therapeutics specializes in gene editing technologies with the potential to transform medicine. The stock's performance is highly dependent on the success of its clinical trials and regulatory approvals, making it a high-risk, high-reward investment. Square Incorporated. Now known as Block, Inc., Square represents ARKK's investment in financial technology and digital payments. The company's innovative solutions in payment processing and its expansion into cryptocurrency have driven its growth. However, it faces competition from other fintech players and regulatory scrutiny, impacting its stock performance. Risks and challenges. Despite its high-profile investments, ARKK and its flagship ETF face several risks and challenges. Market volatility. ARKK's concentrated exposure to high-growth technology stocks makes it susceptible to significant market fluctuations. The fund's performance is closely tied to the success of its major investments, which can experience extreme volatility. Valuation concerns. The high-growth nature of ARKK's investments often leads to elevated valuations. These valuations can become a risk factor if the underlying companies fail to meet growth expectations or if market conditions shift. Technological disruption and competition. The disruptive technologies that ARKK invests in are subject to intense competition and rapid changes. Companies that seem promising today might face challenges from emerging competitors or technological advancements that render their innovations less relevant. In summary, the ARK Innovation ETF, ARKK, offers a compelling case study of Cathie Wood's investment approach, highlighting both the potential rewards and risks associated with investing in disruptive technologies. While the fund has achieved impressive gains, it has also faced significant volatility and challenges. Investors should carefully evaluate the risks and consider how they align with their investment goals and risk tolerance. The impact of Cathie Wood's bold vision on investors. Cathie Wood's bold vision for investing in disruptive technologies has had a significant impact on the investment landscape, influencing both individual and institutional investors. Her approach has drawn attention for its innovative perspective and high-risk, high-reward potential. Here's how Wood's investment strategy has impacted investors and the broader market. Influence on investment strategies. Wood's emphasis on disruptive technologies has encouraged many investors to reassess their strategies and consider higher-risk, high-growth opportunities. Her success with ARK Invest's funds has demonstrated that investing in innovative companies can yield substantial returns, inspiring others to explore similar investment approaches. Institutional investors have also taken note of Wood's strategy. Some have adjusted their portfolios to include a greater focus on technology and innovation, seeking to capture the potential growth associated with emerging technologies. Wood's influence has contributed to a broader acceptance of disruptive technology investments and a shift away from traditional, more conservative investment approaches. Increased interest in disruptive technologies. Cathie Wood's advocacy for disruptive technologies has led to increased interest and investment in sectors such as electric vehicles, biotechnology, and artificial intelligence. Her focus on these areas has helped highlight their potential and attract additional capital from both retail and institutional investors. The heightened interest in disruptive technologies has spurred innovation and competition within these sectors. Companies in fields like electric vehicles and gene editing have experienced increased funding and attention, accelerating their development and commercialization efforts. Wood's investment philosophy has played a role in driving this trend, contributing to the rapid growth and evolution of these technologies. Challenges and criticisms. Despite the successes and impact of Cathie Wood's investment strategy, it has also faced criticism and challenges. Skeptics argue that the high-risk nature of disruptive technology investments can lead to significant losses, particularly during periods of market downturns. The volatility and uncertainty associated with these investments can be difficult for some investors to manage. Critics also point out that the focus on disruptive technologies can sometimes lead to overvaluation and speculative behavior. The high growth expectations associated with these technologies can result in inflated stock prices, which may not always align with the underlying fundamentals of the companies. In addition, the rapid pace of a technological change can lead to unpredictability. Companies that are seen as leaders today might face unforeseen challenges or competition from new entrants, impacting their long-term prospects and stock performance. Biotechnology, key innovations and challenges. Biotechnology is a cornerstone of ARK Invest's strategy, aiming to revolutionize healthcare with genetic research, drug development, and personalized medicine. The sector promises groundbreaking advancements, but it also carries significant risks. Recent breakthroughs and opportunities. Biotechnology is making waves with innovations like CRISPR gene editing. This technology has the potential to correct genetic disorders and transform medicine. Companies like CRISPR Therapeutics, a key holding in ARK's portfolio, are at the forefront of these breakthroughs. The development of new therapies and diagnostic tools offers exciting growth prospects and the chance for impressive returns. Yet, biotechnology is inherently risky. The success of biotech firms often depends on the outcomes of clinical trials and regulatory approvals, both of which can be uncertain and expensive. Developing new drugs involves a lengthy and costly process, with a high failure rate in trials, leading to considerable volatility in biotech stocks. Additionally, changes in healthcare policies and reimbursement rates can impact profitability. Despite the promising potential, the risks and uncertainties make biotechnology investments particularly volatile. AI and machine learning, current applications and future potential. Artificial intelligence, AI and machine learning, ML, are rapidly advancing fields with transformative effects across various industries. From healthcare and finance to autonomous vehicles and customer service, AI and ML are becoming integral to modern technology. Current applications. Today, AI is used for predictive analytics, natural language processing, and computer vision. Companies in ARK's portfolio are leveraging these technologies to develop new business models and improve efficiency. The potential of AI to drive innovation and disrupt traditional industries creates significant investment opportunities. However, the AI and ML sector faces its own set of challenges. The fast pace of technological change requires continuous innovation and adaptation. Companies must navigate issues related to data privacy, ethical concerns, and regulatory scrutiny. The competition is fierce, with many players vying for dominance in this growing market. Success in AI investments depends on a company's ability to stay ahead of technological trends and address emerging challenges. Summary: electric vehicles, biotechnology, and AI and ML sectors offer substantial growth potential, but they come with inherent risks. The dynamic nature of these industries means investments can be highly volatile and influenced by various external factors. To navigate these sectors, investors need to understand market trends, innovations, and challenges. Being prepared for significant fluctuations and staying informed about sector-specific factors is crucial for assessing the risks and rewards of investing in Cathie Wood's vision. Benchmarking and performance. Evaluation. Evaluating the performance of disruptive technology funds like those managed by ARK Invest presents unique challenges. These funds target emerging sectors that lack standard benchmarks, making performance assessment more complex. Challenges of benchmarking. Disruptive technology funds. Disruptive technology funds often invest in niche areas like electric vehicles, biotechnology, and AI, which do not have established benchmarks. Traditional indices like the S&P 500 or NASDAQ reflect well-established companies and sectors, which may not capture the volatility or growth potential of disruptive technologies. The high volatility of disruptive technology sectors complicates performance evaluation. Traditional benchmarks may not account for the rapid advancements and market fluctuations in these sectors, leading to potential discrepancies in performance comparisons. Additionally, disruptive technology funds often have a long-term investment horizon, betting on innovations that may take years to materialize. Traditional benchmarks designed for stable sectors may not align with this long-term perspective, further complicating comparisons. Comparison with traditional indices. Comparing ARK Invest's funds with traditional indices provides some insights, but also has limitations. Traditional indices represent a broad range of sectors and include established companies with stable earnings, while disruptive technology funds focus on emerging and often speculative sectors. For example, ARKK might experience high growth during periods of technological excitement, but also significant declines during market corrections. Comparing such performance directly with the S&P 500, which includes diverse sectors with relatively stable earnings, may not provide a fair assessment. Traditional indices may also not fully capture the impact of emerging technologies targeted by ARK's funds. This can lead to discrepancies in performance comparisons, as traditional indices might not reflect the full spectrum of innovations and risks associated with disruptive technologies, custom benchmarks, and their relevance. To better reflect the unique characteristics of disruptive technology funds, custom benchmarks have been developed. Custom indices. ARK Invest has worked with firms like MSCI to create custom indices that capture the performance of disruptive technologies more accurately. These indices focus on sectors targeted by ARK's funds, providing a more relevant benchmark for evaluation. Sector-specific benchmarks. Custom benchmarks can include sector-specific indices that aggregate performance data from relevant industries. This approach allows investors to better gauge how ARK's funds perform relative to their specific sectors. Dynamic benchmarks. Custom benchmarks can be adjusted over time to reflect the evolving nature of disruptive technologies. This adaptability provides a more accurate assessment of performance as new technologies emerge and market dynamics shift. Long-term trends and future outlook. Investing in disruptive technologies, particularly through funds managed by Cathie Wood's ARK Invest, offers a glimpse into the future. However, navigating long-term trends and future outlooks requires understanding both opportunities and risks. Emerging trends. Disruptive technologies are reshaping industries and creating new market opportunities. Key trends include AI and machine learning. AI continues to drive technological innovation, with advancements in machine learning and neural networks enabling machines to perform tasks once thought to require human intelligence. Companies leading in AI development present major investment opportunities due to their potential to revolutionize various industries. Biotechnology and genomics. Rapid advancements in biotechnology and genomics are paving the way for breakthroughs in healthcare. Technologies like CRISPR gene editing are expected to transform medicine, while data analytics is enhancing drug discovery and development. These innovations offer substantial growth potential for investors. Electric vehicles, EVs, and clean energy. The shift towards electric vehicles and clean energy is gaining momentum, driven by government policies and consumer demand. The transition to sustainable energy solutions presents significant investment opportunities as new technologies and infrastructure are developed. Impact of economic and regulatory factors. The future of disruptive technologies is influenced by economic and regulatory factors. Economic cycles. Economic downturns can impact investment in disruptive technologies, leading to reduced funding and slower growth for emerging sectors. Conversely, economic booms can accelerate technological advancements and market adoption. Regulatory changes. Regulations related to data privacy, environmental standards, and intellectual property rights can influence the development and commercialization of new technologies. Staying informed about regulatory changes is crucial for understanding their potential impact on investment opportunities. Technological advancements. Rapid innovation can lead to market shifts and changes in competitive dynamics. Investors must remain agile and adapt to new technological developments to capitalize on emerging trends and mitigate risks. Predictions and strategic considerations. Predicting the future of disruptive technologies involves assessing potential breakthroughs, market adoption rates, and long-term sustainability. Increased integration of AI. AI is expected to become more integrated into daily life and business operations. Companies leveraging AI to enhance their products and services are likely to experience significant growth. Growth in biotechnology. Investment opportunities in genomics and personalized medicine are likely to increase as biotechnology advances. Companies with promising pipelines and strong research capabilities will be at the forefront of this growth. Sustainability and clean energy. The transition to clean energy and sustainable technologies will drive investment opportunities. Companies involved in renewable energy, energy storage, and sustainable practices are expected to benefit from growing demand and supportive policies. Conclusion: investing in disruptive technologies, as championed by Cathie Wood, presents a thrilling yet challenging journey. Her bold vision for harnessing the power of emerging technologies offers significant opportunities for those willing to embrace the inherent risks. While sectors like artificial intelligence, biotechnology, and electric vehicles hold the potential for remarkable returns, they also come with high volatility and uncertainty. Navigating these investments requires a deep understanding of both the transformative potential and the risks involved. As we've explored today, Cathie Wood's approach emphasizes dynamic management and a focus on future innovation, driving high-growth strategies that can both inspire and intimidate. If you're intrigued by the possibilities of disruptive technologies and want to dive deeper into investment strategies and market trends, don't forget to check out our other videos on the channel. For more insights, be sure to like, share, and subscribe. Your support helps us continue to provide valuable content and analysis. Thanks for watching, and we'll see you in the next video. Raise your IQ with cutting-edge info, insights, and analysis. Visit and subscribe for free at the link below.